Hey everyone, welcome back to our YouTube channel Learn with Sahira. In this video, we are going to see the complete and clear explanation of valuation of shares from unit number 5 advanced accounting subject, which is for degree 3rd semester students. Before going into the question and solution, first let us talk about unit number 5. Okay, so in unit number 5 you have two different topics. One is valuation of goodwill and the other one is valuation of shares. So out of these two, if you are perfect with any one, you can easily score 12 marks. No need to give your time to both of the topics or both of the methods. You need to just be perfect with one. As I already said you in the complete overview video of advanced accounting, that from unit number 5, if you prepare any one, that is enough. If you didn't watch advanced accounting total subject overview video and important questions video, go to our channel playlist advanced accounting semester 3, under which you will be finding all the videos in which you will be finding advanced accounting overview video. Definitely watch that video, because in that video I have clearly said you from each unit what are the different topics, and in that different topics what are the important ones and what are the topics which you can leave in the choice. Everything I have explained you, so definitely watch that video. So we are leaving valuation of goodwill. Okay, so if you are preparing valuation of goodwill, you need to be perfect with the problem as well as theory, because sometimes they might ask you problem or theory. If you are preparing with valuation of shares, definitely problem will be there, no doubt, but you should also be perfect with the theory also. If they ask theory in short questions or if they ask theory, you should be able to attempt. Getting my point? Okay, so this one video is enough, only in this one video we will be completing valuation of shares. Okay, if you want me to explain any other practice question, you let me know in the comment section. I will explain you practice question as well, but this video is enough to understand the valuation of shares and do the solution whatever the question they might ask you from valuation of shares. So in this topic you are having three different methods, which you can see I have already written. One is net asset method, and the other one is yield basis method, and the last one is fair value method. If you are good in net and yield, then fair value you can do it easily, because if you do both these directly you will be getting fair value. In this chapter mainly you should remember the formulas. If you remember if you remember the formulas are not big, not long, lengthy. No, formulas are very short. For net value, net asset, one formula is there. For yield basis, one formula is there, and for fair value, one formula is there. Only short formulas. If you remember that formulas, you can do the complete solution easily. Getting my point? So in this video valuation of shares complete explanation, we are going to see net asset, yield basis as well as fair value, so that you will wind up the chapter unit number 5. Getting my point? Chalo, let us get started. And before starting, let me remind you all that I have already made all subjects and languages important question and answers notes, which are easy, simple and clear to understand. If you want those notes, you can text me on my Instagram Learn with Sahira. I will be giving you the access for all subjects and languages important question and answers notes, which are exam focused. Okay, in very less time you can be perfect with the subject. In very less time you can cover the whole syllabus and easily you can score good marks in your exams. If you want, text me on my Instagram ID Learn with Sahira. I am dropping my Instagram ID link in this video description as well. But note, payment is must. I repeat, there is little payment, very little payment, but definitely you will be seeing very big results. Only a few days are left, so I suggest you to take those notes and start your preparation. And only the students who need should text me. Okay, so keeping this aside, let us get started with the question. On March 31st, 2018, the balance sheet of a limited company disclosed the following position. Okay, so this is the balance sheet, liabilities and assets. Keeping this aside, let us go to the next part of the question. On March 31st, 2018, the fixed assets were independently valued at 7 lakhs and goodwill 70,000. Okay, when you find assets or goodwill or any other asset, any other liability down after the balance sheet, then you need to consider that amount only, not the amount which is there in this balance sheet. Getting my point? Here fixed assets are 5 lakhs but we will not be taking it 5 lakhs. we will be taking it as 7 lakhs because we will not be considering the amount given in the balance sheet if they give after the balance sheet or out of the balance sheet. Okay, so there is a difference, right? You need to remember, whenever you are getting some amount down, then you should not consider the amount which is there in the balance sheet. You should consider the down below given amount. Okay, so compute the value of company share by net asset method. Net asset method is what, ma? Your first method from valuation of shares. Okay, so net asset formula, what it is there, it is really very much easy, ma. Okay, you just need to remember this formula. Easily you can do net asset. I'm saying you, this formula is enough. Okay, what is value of each share? Value of each share is equals to amount available to equity shareholders by number of equity shareholders. Okay, value of each share they will give you in the question. Number of equity shareholders they will give you in the question. You just need to find out amount available to equity shareholders. And after finding this, if you substitute the values into this formulas, you will be getting your net asset value. Getting my point? After getting this amount available to equity shareholders, you need to substitute all the numbers to this formula. You will be getting net asset value. Okay, to find this amount available to equity shareholders, we will be minusing assets from liabilities. No, it is, we will be minusing liabilities from assets. Okay, assets will be above and liabilities will be below. And whatever the amount we are getting after subtracting liabilities from the asset, that is nothing but your amount available to equity shareholders. Okay, so without getting late, let us get started with our pro forma. Okay, valuation of shares, you will be minusing assets from liabilities, right? So here is the pro forma. Particulars, amount. First we need to take assets, ma. Okay, in assets, what you will be taking, all the assets whatever they have given you in the question, you need to take. Fixed asset, do we take this? No, we take this. Okay, fixed asset will be this because as I already said you. Next, current assets. Yes, we will be taking current assets. Yeah, we will be taking current assets. Fixed assets completed, current assets completed. Goodwill is also a asset, no ma. It is intangible asset, not tangible. It is intangible. But do we take this amount? No, we don't take this amount. We take this amount, 70,000. So add as it is, you take ma assets. First you take fixed assets. Fixed assets. What is the amount? Fixed assets amount? It is 7 lakh. Right. Okay. Then what we have? We have current assets. What is the amount? Amount is, yeah, amount is 2 lakhs. Then it is goodwill. Okay. But goodwill amount is 70,000. So we need to take 70,000 only. Good. Well, how much is the amount ma for goodwill? It is 70,000. Now you add all these amounts. Do we have any other item in the assets? If we have any other item, we need to take ma. Not only this assets, whatever the assets are given, if they don't give this question, if they give other question also, whatever assets they are giving, you need to take it in the asset side. Getting my point? After getting all the assets, what you need to do? You need to add all the assets value. Now add all the assets value. 7 lakhs plus 2 lakhs 70,000. How much it is ma? 970,000. It is nothing but 9,70,000. So what it is? It is addition of all the assets, right? So this 9,70,000 is nothing but your gross value of assets. It is also known as gross value of assets. Okay, getting my point? This is nothing but your gross value of assets, all the amount of assets. After assets, what I said you need to minus liabilities. Did I said you? Yes, liabilities. You need to minus the liabilities. But remember, in the liabilities, if you find any reserve, if you find any general reserve, if you find any funds, if you find P&L account, if you find preliminary expenses, you should not consider this. Okay, sorry. Okay, now it is okay. Okay, you should not consider this. If you find reserve or general reserve, funds, P&L, preliminary expenses, you should not consider this. Other than this, whatever they are giving you in the liability side, you take all them here. Okay, what is there, ma? Reserves, as I said you should not take. Reserve, you should not take. P&L account, you should take P&L account, ma? No, you should not take P&L account also. 5% on debentures. Do we take 5% on debentures? Yes, because I didn't said you that you should not take debentures, right? So you will be taking debentures. 5% debentures. 5%. Okay, how much is the amount, ma? 5% debentures. You see here, it is 1 lakh. So you need to take 1 lakh as it is. Okay, I'm taking here. Okay, 1 lakh I already took. Then what we have current liabilities. Should we take current liabilities? Yes, we are not having, like, we should not take it, right? We need to take current liabilities as well. So take current liabilities also. Current liabilities. How much is the amount for current liabilities? It is 1,30,000, right? So take it 1,30,000. After this, do we have any other liability here or here anywhere? No, we don't have any other liability. Only debentures and current liability we have taken. This is nothing but share, right? So we will not be taking share. So reserves we didn't took, P&L account we didn't took. So what we need to do? We need to add this. We need to add this. How much it will be, ma? 2,30,000 it will be. Yes, 2,30,000. Now what you need to do? From this amount, as I said you, from assets you need to minus losses. Then only you will be getting your what do you call, amount, right? Total amount. That amount is nothing but your amount available to equity shareholders. So you minus from this, you minus this. Okay, yeah, already it is there. Minus 2, 3. How much it is, ma? When you do the calculation, it is 7,40,000. What is this 7,40,000, ma? It is nothing but your amount available to equity shareholders. Yes, did we get amount available to equity shareholders? I'm so sorry, there is some problem with my mobile stand. It is going on falling down, so I'm so sorry about it. So yes, we got amount receivable to equity shareholders, right? After this, what we need to do, ma? We need to substitute the values into the formula. What's happening here? Okay, now it will not. Okay, we need to substitute the formula. We need to substitute the amount into the formula. So what is the formula, ma? Value of each share. Value of each share is equals to amount available to equity shareholders. How much is the amount available to equity shareholders? It is 7 lakh. Oh, yeah. How much it is, ma? 7,40,000. Okay. Then divided by to what we need to divide? We need to divide it to the number of equity shareholders. See, number of equity shareholders, how we will get the issued capital is 10 per share, right? When it is 10 per share, the total amount is 4 lakhs. ठीक है, एक शेयर पे 10 अमाउंट रहा तो टोटल अमाउंट उसका 4 lakhs हो रहा थे. तो what we need to do, we need to divide this 4 lakh with 10. We will be getting our number of equity shareholders. Yes, number of equity shareholders are 40,000. So now we need to do 40,000 here ma. Okay, then what you need to do now, you need to, is it visible? Yeah, I have written here. Here it is nothing but amount available to equity shareholder according to the formula. Then it is 40,000, which is number of equity shareholders. How we got? We divided 4 lakhs with the 10. Then we got 40,000. You do the calculation now ma. 740 divided by, how much it is? 18.5. Okay, it is 18.5. 18.5 is nothing but value of each share. You can write here value of each share, you can write. And this is the value of company share by net asset method. Okay, we have completed net asset method, right? Yes, did we completed net asset method? Yes. Now we will be going to yield basis method. Yield is also known as earning method or market method. Whatever they ask you, it is same. Okay, for this also there is a formula. If you understand this formula, easily you can do it. So you can have a look at the question. From the following particulars, calculate the value on equity share. Okay, it is 1009% preference shares of 100 each, which is 1 lakh 20,000. Then equity shares of rupees 10 each, 8 per share, called up and paid up 1,60,000. Expected profit per share before tax is 2 lakhs. Rate of tax 40%. Transfer to general reserve every year 20% of profit. See, don't get confused by looking at the question. It is really very easy. When we solve the problem, you will be getting to know. Don't get confused. It is really very easy. You just need to understand the formula. Formula, what is there? Yield value of share. This yield basis method, no, yield value of share is equals to expected rate by normal rate into prepaid value of each share. Okay, expected rate, normal rate into prepaid value of each share. They will be giving you prepaid value of each share, they will be giving you normal rate. You need to find expected rate, that's all. To find the expected rate, there is a formula again. Available profit by total paid up equity share capital into 100. Okay, they will give you everything ma. You just need to find out expected rate. How you will be finding expected rate? There is a pro forma again. You need to find out expected rate. As I said, you everything will be given in the question, only expected rate, and this is the formula. First, we will be taking profit before tax. Let me take other pen. Okay, profit, whatever the question they might ask you, you write this. Okay, profit before, what is it, what it is? Tax. Profit before tax, how much it is? Expected profit per year before tax is 2 lakhs. Yes, they have given us 2 lakhs. So take this amount 2 lakhs. Then, do we have any percent on the tax? Yes, we have rate of tax 40%. So we need to do 40% on this 2 lakhs. So what we are doing, we are lessing the amount 40%. So how we need to do? Tax is at the rate of 40%, no ma, at the rate of 40%. That is why we are taking here 40%. If any other percent they will give, you need to take that. Okay, okay, on this tax, how much we are doing? We are doing 40%. We need to minus if they are giving any rate of tax. Okay, so how we are going to do it? 2 lakhs, okay, into 40 divided by 100, or you can directly do 40%. So do it ma, do it in your calculator. 2 lakh into 40%, how much it is? It is 80,000. okay, what it is? 80,000. So from this tax we need to minus this rate, right? we need to minus this. So you need to minus, then whatever you are getting, it is profit after interest and tax. Okay, so from 2 lakhs minus 80,000, how much it is? It is 1,20,000. It is here, let me do 1,20,000. Okay, 1,20,000, what it is, ma? It is profit after interest and tax. Okay, after interest and after tax. Okay, before tax profit इतना था, उसके profit पे tax लगे तो tax कितना आया अपन को? 80,000 आया. तो ये profit में से वो tax को निकाले तो इतना tax आया. So this is after interest as well as it is after the tax. Okay, how much it is, ma? It is 1, 20, 000, which is nothing but 1,20,000. After this, what we are going to do, students? One more thing here. If we have any general reserve, okay, if we have any general reserve, or if we have any dividend, if we have any P&L amount, we need to take this here in the pro forma after calculating the profit before tax and after the tax we are getting the profit. No, after this we need to calculate these amounts if they are giving in the question. What it is? It is general reserve, dividend and P&L amount. Do we have general reserve in the question? Yes, it is transfer to general reserve. This point has been completed, right? Now it is transfer to general reserve every year 20% of profit. Profit, how much it is, ma? It is 1,20,000. On 1,20,000 you need to do 20%, it seems. So how you will be doing? You will be doing 20%. How we have done the calculation on the tax, in the same way we are going to do here. But first we will be writing transfer to general reserve. Right, minus transfer to general reserve. How we are going to do? We are going to take the amount 1,20,000 into how much percent it is, ma? You see here how much percent they have given you, that much percent only you need to take, 20 by 100. So do the calculation, how much you are getting? 1,20,000 into 20 divided by 100, it is 24,000. So what this 24,000 is? Yeah, it is 24,000. It is transfer to general reserve. Okay, this is nothing but your transfer to general reserve, which is 24,000. Do we have any dividends? Do we have any dividends in the question? Have a look. Dividends are nothing but your preference shares, right, ma? These are nothing but preference shares. It is 9% on the preference shares. So we will be taking this as well. Okay, you need to write it here. Again, minus 9% dividends on preference shares. Okay, how much is the amount, ma? Here preference shares, it is 9%, but how much is the amount? See, for each it is 100, but we don't care about 100 and all. What is the total amount? Total is 1 lakh. So we are going to take 1 lakh into 9 by 100. 1 lakh into, I'm so sorry, I can't do anything now, I'm helpless. Please try to adjust. Okay, on 1 lakh you need to do 9 by 100, which is 9%. Okay, we are going to do it. 1 lakh into 9%. How much it is, ma? It is 9,000. Okay, see, we got this, but after this we have not minused it, right? From this we need to minus this. So first let us minus it. Okay, we will be taking this amount anyway. We need to minus from 1,20,000 minus 24,000. How much it is, ma? It is 9,6,000. 00, that is nothing but 96,000 ma. Okay, 96,000 we are getting after minusing this amount, so this will come here. 96,000 will come here. Okay, I have written it here. Actually this will come here because we have minus to 24,000 from 1,20,000, right? Now from 96,000 we need to deduct 9,000 because we are deducting dividends, right? So from 96,000 we need to deduct 9,000. How much it is, ma? It is 87,000. This is nothing but your available profit. Available profits. Students, listen to me carefully. Here, to find out the expected rate, what we are having a formula in which we need to find out available profit. In this, what we are going to do, we are going to take the profit. Definitely they will ask you the profit. You take the profit before the tax, and they will be definitely giving you tax or any interest. So what you need to do, you need to deduct that tax or interest from the tax before the tax or tax before the interest. You will be getting the amount. In that amount, if you have general reserve, if you have dividends, if you have any P&L, you need to deduct that amount. Later you will be getting, in the last you will be getting available profits. Okay, after getting available profits, what you need to do, you need to do this, what do you call, you need to substitute that into the formula. What is the formula here? Available profit. Available profit, how much it is, ma? Let us do here itself. Available profit, expected rate. First we need to get expected rate, then only we can find out the yield value of share, right? Expected rate, value, profit. How much it is available profit, ma? 87,000 divided by what it is, total paid up equity share capital. Total paid up equity share capital, how much it is? See, total share capital called up paid up share capital. Total paid up share capital, how much it is? It is 1,60,000. So what we are going to do, we are going to take 1,60,000. In the formula, what it is, you need to multiply it by 100. So multiply it by 100. Okay, what amount you are getting? Let us see. 87,000 divided by 1,60,000 into 100. It is 54.37. Are you able to see? So it is nothing but your 54.37%. It is nothing but your expected rate. After getting expected rate formula, in that formula we have substituted the values, ma, right? Available profit, it is this much, which we have found out with this pro forma. Then the total paid up equity share capital they have already given in the question. After substituting the values, we got 54.37. After this, we need to substitute the amounts in this formula to get yield value of share. Expected rate, how much is the expected rate, ma? Here yield value we are finding, yield value of share. In short form I am writing. Okay, so expected rate, how much it is? Expected rate 54.37. okay, divided by what it is? Normal rate. How much normal rate they have given you? Normal rate, it is 15. So we are going to do it 15 into also there, no, into with what we are multiplying? Prepaid value of each share. Prepaid value of each share, how much it is, ma? See, each share is 8. Okay, for each share it is 8. So we are going to multiply it with the 8. Getting my point? Now you do the calculation. You will be getting your yield value of share. 54.37 divided by 15 into 8. How much it is? It is 28.99. If you are getting more than 5 number here, you can take the other number, which is nothing but your 29. 28 it is not, it is 29. So equals to 29. Okay, getting my point? You have completed your yield value of share also. Okay, now let us have a look at the fair value. If you are perfect with this, net asset value and you are perfect with this yield value, you will be doing fair value. They will be giving you the question per net asset or yield value, and they will also ask you to find out what do you call this fair value method. How you need to do share value as per net backing method, which is nothing but net में जो amount आया अपन को, in net value we have got this amount, no, this amount plus this yield amount divided by 2. If you do, you will be getting fair value. Damn easy. If you are okay with this yield and net, definitely you will be doing this. It is nothing but net का amount ले लेना, yield basis पे जो amount आया अपन को वो ले लेके you need to divide it by 2. So what we got, ma? Okay, they have already given in the question. See, yield basis method they have given you 125. First it is net banking, no? Yes, first it is net banking. So what we are going to do, we are going to take 125 plus 100 divided by 2. How much it will be, ma? 125 plus 100 divided by 2. It is 112.5. This is nothing but your fair value. Okay, wait, company asset backing method, how much it is, ma? It is 140. Okay, 140. Wait, let us do here 140 plus yield basis method they gave us 125. 140 plus 125 divided by 2. Let me do it again. We should not take this much. Actually, this is not the amount. See, they have already given us the backing method. Backing method means what? Net backing method 140 plus what you need to do, 125 you need to do. How you will be doing it? 140 plus 125 divided by 2 you need to do. It is 140 plus 125 divided by 2, which is nothing but your 132.5. Okay, so this is the amount, ma. I hope this was crystal clear. If yes, let me know in the comment section. This is easy, ma. They will not give you question also. They will ask you this and this, and they will ask you to find out fair value method. You need to just have a look. See, you will be getting confused if they give you extra amounts like how I did. You need to take care like you are getting these terms, backing method as well as yield basis method. You need to add both of them and you need to divide it by 2. You will be getting your fair value method. All the very best. See you all in the next video. If you want me to make any other video, let me know in the comment section. Bye bye.